So we just finished week 20. Looks good overall. I'm on track to make the money back that I lost, to get back to the amount that I had at the beginning of the year. So I began the year at around $16,000. I had it up to around $19,500, and then I lost about half of that. And what my biggest mistake was I wasn't managing my risk. I made a number of things, a number of changes here to adjust that risk. Slow and steady gains over the long term. I want to make sure that I have a system that works and that I'm not risking all of my account to make some money. And so far, we are right on track. Let's take a look at how we did in week 20. So before we look at the numbers for the week, let's take a look at my positions and what's happened over the course of the week. With Palantir, I had one put that I was selling at $23, and I had that for about $100. So that means my break-even point was around $22. I decided to go ahead and let that put get assigned for 100 shares. And you might ask, why would you do that? And really, I'm left with two options when it comes to whether or not to just roll it out in time or to let these puts get assigned. So if I was going to roll this out in time, then I would only have around $6 of credit, which that's fine. Not a problem at all. But I decided to go ahead and let them get assigned because I really want to own the stock. So those are the two options that I have. I can either decide to just own the stock, collect the credit, hold on to the shares, and potentially sell the calls at that point, or just roll it out in time for a credit. So that's the decision I have to make with every position that's about to expire is, do I let this get assigned or do I roll it out in time? The other option is just to close the position for a profit. And the reason why I didn't close the position is because it wasn't for a profit. I was red around $30 by the time it was set to expire. So it would have been a losing trade if I closed it. So I definitely didn't want to do that. I wanted to manage that loss and either roll it out in time and wait for the price to come up, or go ahead and just own the shares and wait for the price to come up. Either way, I'm waiting for the price to go up. And if I own the shares, I have the option of selling calls, which typically, if the calls are worth more than the puts, it makes it an easy decision because you can own the shares and start selling calls for more money. So that's the decision, I guess, map you could say of why I decided to go ahead and do Palantir, go ahead and own the shares there. And I own it now, and my break even is around $22. It closed at $21.75, so it's a really good deal. I got the $100. My break even's $22, and so it's just a matter of waiting for the price to go up. And really with Palantir, I've got no problem just hitting the buy button. And so to be where I'm at right now with it, I have no issues. And I made this play before earnings came out, so it really didn't play out the way that I wanted to because I was expecting the price to continue to go up. The price went down, and so I was wrong there. But being able to manage with options here, it actually turned out to be, I'm break even right now pretty much, and I'm just waiting on the price to go up. So really not a bad deal here. I can start selling calls and then drop that break even down below $22, and I'll be in good shape. So earlier in the week, I rolled SoFi out in time. So I had a $7 put. I rolled it out in time a week, and I also rolled it up to $7.50 because I really want to own SoFi. The price is going up. We can see it closed at $7.28. And so I moved it up into the money to collect more premium and also to try to get assigned. So that's really what I want to do. So it shows in the money. And if these got expired and I got assigned, I wouldn't have any issues there. But if the price keeps going up on SoFi, then I'm going to have to keep rolling the price up and then wait to get assigned, collecting credit along the way. So you can see here, SoFi has been doing really well for me just because of the credit that I've been able to get with just the small amount of money that I've used. Right now, I've got two contracts at $7.50. So that's around $1,500 there that I'm using. And I've been able to collect a pretty decent amount of credit here. So with two contracts, we're looking at around, pretty close to $100, maybe just a little over $100. So it looks really good with SoFi here. And when I own the shares, what I'm probably going to do is hold on to 100 shares and then start selling calls on 100 shares. And so that's my plan with SoFi, is to hold on to it. I really want to hold on to Palantir too, so I got to debate on whether or not I want to sell calls on that, at least in the short term, because I think the price is going to go up, and so I don't want to get. I want to try to collect some capital gains there on Palantir if I can. Also with Tesla, I'm a long-term shareholder here. I'm not too worried about what happens in the short term, but it is going up. We were settling down around 170, and now it's decided to come back up here to 176. So we're looking pretty good on Tesla overall. So not worried about that. I have a lot of confidence in Tesla's future, and I just want to be part of it, own the shares, and hold on for the ride. All right, so we're coming into week 20 with a net liquidation of $11,604. I collected $40 in premium. That's 2.7% return on the week. Year to date, we're at negative $4,419. Premium collected year to date is negative $5,349, and my percent return on the year is negative 27.6%. My goal is to get that back up to zero by the end of the year. And you can see that I'm pretty close to on track. If you look at the chart that I have, I've drawn a line that with a slope up to my goal for the year to make it back to that $16,000 range that I was at the beginning of the year. And you can see that the line chart here, my net liquidation is following right above that line. So it's good to see that we are on track to get that money back by the end of the year. And if you want to see exactly how I managed to lose 27% of my account, take a look at my previous videos. You can see the lessons that I've learned and how I'm managing risk now. And you can see here now that I have positions in T-Flow. And so that's taking up most of the money. You can see the cost that I have is around $7,600 almost. So T-Flow, I have most of my money in T-Flow. It's a very safe place to hold cash. And so I've got roughly, I'm using half of the amount of money that I have in T-Flow. So it's impossible, you know, the most that I could ever lose in my account if all of my positions went to zero is I would at least have half of my account. So I don't plan on that happening, right? I'm planning on using good stocks here that aren't going to go to zero or go bankrupt. But that's what I'm using, is half of my account is actually in a cash position. It's a treasury bill position that collects around 5% a year. So managing, I think that's the biggest part, the biggest change to my strategy, to my portfolio, is I actually have most of my money, if not, you know, a good chunk of my money is sitting in a safe place, and I'm not having it all in options. My buying power usage before was around 125%. I mean, I had a lot of money in options. I had a lot of big positions. They were going for me because everything was going up. So it looked great, everything was going well, then the market crashed, or it corrected. I said crash, but my account crashed, but the market corrected here and it obliterated my account. So my buying power usage is now at around 44%. I mean, it's totally different from what I'm doing, what I was doing in the past. I don't have as much funds in the market. It's roughly half my account. So if you want to go into the details of that, take a look at my previous videos there. And I'm a new options trader. I'm on a learning journey, and I want to share what I learned with you. So if you want to tag along, hit that subscribe button. If this video was a help to you, hit the like button, and we will see you on the next video.